Jacob here with 5-Star Real Estate Investing, and today in this video we are going to talk about how you can find the total monthly mortgage payment for a rental property that you're looking to buy or refinance to see if the deal is a good deal or not. So the first thing that you're going to want to do is obviously know what property you're buying and how much you're going to buy that property for and how much money you're going to put into that property if you want to do a refinance, for example. So how much are you going to buy for, or how much are you going to refinance out of the property? So you're going to go over to Google and you're going to go type in amortization calculator bank tree. So Banktree is the one that you're going to want to click on, and they are just pretty simple, easy to use calculator that I always use. You're going to put in the total amount, and then you're going to put in current interest rate. So if you need to know kind of a current interest rate, you can just look up current interest rates United States today, and it will pop up a few different options for you to look through, and then it'll kind of show you a range of the interest rates. I usually just kind of go in the middle or a little more on the high side, just to be safe, because this is going to be an investor loan, most likely. So you might not get as good of a rate if it was like an FHA loan. So you're going to go to the amortization calculator, put in the total amount. So for example, we're going to put in $200,000, and then you're going to put in the interest, and it's going to give you a total payment. So for example, the payment would be $1,000. I don't know if that's actual math, but for this video's sake, it's $1,000 for the principal and interest after you put it in there. Then what you're going to want to do is go over to Google and type in your county. So for example, I live in Louisville, Kentucky, so it's going to be Jefferson County. So I'm going to type in Jefferson County tax bills, and then I'm going to type in the address, and from there it's going to tell me the yearly tax bill. I'm going to divide that by 12, and that's my monthly tax cost. Because whenever you're doing your mortgage payment, you want to get the PITI, which is principal, interest, taxes, and insurance. So now that we have the monthly tax amount, what we're going to do is we're going to call a few insurance agents. I personally like State Farm. I've used a couple different companies. I like State Farm, but anyway, call a couple different insurance agents and get a quote on the property for insurance for a year. So then you're going to take that yearly amount, divide it by 12 to get the monthly insurance cost. You're going to add the monthly insurance cost, the monthly taxes cost, and then add it with the principal and interest, and that's going to get you your total monthly amount. So for in this example, taxes are $100, insurance is $100, and our payment's $1,000. So that comes out to $1,200. So for example, this property would rent for $1,650. So for me, this would be a good deal because that's $450 of positive net cash flow every month. Even if you added in an 8% vacancy into there, it's still going to have around $400 a month net cash flow. So whenever I'm looking at a deal, I'm typically looking for $300 to $400 minimum for a single family house. If it is a 2 to 4 unit, I'm looking for around $300 a month per unit. So that's how you can assess the deal, by finding out what the total amount is going to be that you're going to be all in for, what your mortgage is going to be with insurance and taxes, and then seeing what you're going to be able to rent the property for. Hopefully this video had provided you some value. Please like, comment, and subscribe if it did. And in our link below, we have 15-minute and 30-minute coaching calls along with the pre-sale for our wholesaling course for $99 until April 14th.